Hello traders, Gary Wagner here, just after 12 o'clock in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is May 24th, 2019, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen. It defined a couple of things. Of course, on Tuesday, when we hit our low, what occurred was almost a triple bottom that we've been looking at. And we'll talk about that on our technical studies. And then Thursday's dramatic climb of about $10 took gold off of those lows and traded to a high of 1,238, which is a defined current resistance level. And we'll talk about that, which changes our perspective on the pattern that we really examined throughout the week, which is a descending triangle. Let's take a look at our price board. Traders, as you can see, gold declined ever so slightly today, losing about $1.10 and is currently fixed at $12.8430. It was definitely an inside trading day compared to yesterday's range. However, it still closed at the upper end of the range. On the other hand, you look at spot gold, and that actually closed up about $1.60. Silver futures closed off by about 7 cents, currently at $14.54. Platinum gained some ground today, about 0.8%, a $6.40 change, currently at $805.90. And lastly, palladium. Palladium closed up 1.52% at $1327.70 after factoring in a $20 gain. Traders, a most interesting and exciting week. We have to take into account the action of last week's action before we go into this week's, and that's when we saw these declines from these highs at 1302, and that traded us throughout the week and actually hit a low, and that is this candle right here, of approximately a 1270.75. However, Monday was an extremely light day. In fact, let me blow this up to show you that, in which there was a tremendously tight range and a pure doji, meaning that the market closed within a tick of its opening price, tick below it. Then Tuesday's action came in which we saw a challenge of these recent lows and double bottoms created right here. However, it was roughly $2 off. The low was 69 and this is at 67. And then that was followed by another extremely light day on Wednesday. However, Thursday's move up was an absolute game changer. That's this candle here. And that is because of a renewed concern about Chinese rhetoric that was coming out of their news stations, along with tweets from President Trump, really riling the whole mix up. The Chinese stated that there was a real question whether or not they even need to meet at the G20. And today we had this inside trading range of the prior candle at the upper end. And what that tells me is a couple of things. First, this level at 1267 absolutely defines current support, without a question of a doubt. At the same time, the 0.382 Fibonacci retracement level is currently defining resistance. And so what's important for next week's trading, which is a shortened trading week, is that we have to watch whether or not it trades to this area and comes down, or more likely goes to this area and breaks through. Because then we have one more challenge, which is basically this resistance line, and this resistance line comes in roughly at 1292. So we will see the first indication of next week, of course, on Sunday. It is not a holiday internationally nor locally. And then Tuesday's open after Memorial Day will give us the real picture when volume increases. And what we want to look for is as follows. If the market challenges this particular resistance area and then bounces back off of it, and that would be an action something like this, where it hits this line and then drops back below, then absolutely the descending triangle is still in play. However, as many believe, including myself, there's a high likelihood that it will now break above it. If the current concern for the trade war deepens, then we would look for a move above 1387. That would indicate a buy signal, but certainly if it breaks above this resistance trend line, that would certainly indicate a solid level of 1302 as the next resistance level, which we could easily see in 10 trading days. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Bye-bye.